Good day, and welcome to today's Delta-9 Cannabis Webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, founder and CEO, John Arbuthnot of Delta-9 Cannabis.
Thank you. Good afternoon, everyone, and welcome to the Planet MicroCap virtual conference. My name is John Arbuthnot, and I'm the CEO and co-founder of Delta-9 Cannabis. I'm going to lead you today through our company's history and key points of differentiation, our most recent financial and operating results, and chat a little bit about why we feel now is an attractive time to become a shareholder in Delta-9. Now, before we begin, I want to remind everyone that today's presentation may contain forward-looking statements which reflect the company's current views with respect to future events. Any such statements are subject to risks and uncertainties which could cause results to differ materially from those projected in the forward-looking statements. For more information regarding risks and forward-looking statements, please do refer to the Delta-9 Cannabis Inc. public filings, which are available on SEDAR and on the company's website. And with that, let's begin. Delta-9 is one of Canada's oldest cannabis companies with over 8 years now of operating experience. Founded in 2012, Delta-9 became the fourth licensed producer of medical cannabis in Canada in late 2013 under the Health Canada MMPR program. Now, the early years of the company were quite modest as a small, privately held licensed producer. 2017 became the real growth year for us. We raised approximately $10 million privately throughout the year and listed our shares publicly on the Toronto Venture Exchange in November 2017. Since that time, we've raised a little over $85 million through a mix of debt and equity to fund the expansion of our three main businesses. We're now one of the few vertically integrated and diversified cannabis companies operating in the Canadian space. Licensed by Health Canada for cultivation, processing, extraction, and wholesale distribution across all of Western Canada. We're a licensed retailer, currently operating 12 cannabis retail stores with plans to add up to 8 stores over the next 12 months. And we operate a business-to-business segment where we sell our proprietary cultivation platform to other licensed and pre-licensed operators. We provide consulting and licensing services, and we sell cannabis genetics. The company shares now trade on the main board Toronto Stock Exchange under the symbol DN, and over-the-counter on the OTCQX under the symbol DLTNF. On the cultivation side of our business, what really makes us unique is how we grow. As opposed to the big open warehouse and greenhouses used by many of our competitors, our proprietary cannabis production methodology is based around a small, modular unit that we call the grow pod. Now, we believe there's a number of benefits to the grow pod versus traditional open warehouse, greenhouse, or outdoor cultivation, but most namely, gives us a very high level of control over the growing environment, dialing in factors like temperature, humidity, light intensity, CO2 saturation. We're able to produce very high quality products. It gives us the ability to customize the grow area for each genetic strain of cannabis that we produce, maximizing the quality and output of those cannabis products. The pods are relatively inexpensive, providing an attractive return on invested capital. The modular format minimizes the risk of contamination or spread of contamination within our facility, and that modular format minimizes the risk of materially significant crop loss. As the company scaled its operations over 2020, we now have 297 grow pods under license by Health Canada in our state-of-the-art cultivation and processing facility. Now, beyond the operational benefits, we feel there's a strong economic case for the grow pods. Given we manufacture these pods on site and employ a team of trades to install the units within our facilities, we've typically expanded our operations historically for less than $100 per square foot. This low capex per foot translates into a higher return on invested capital as these grow pod areas have been operationalized. The company's operations, which are situated in Winnipeg, Manitoba, have provided the company with relatively cheap inputs, such as electricity and labor. As we've scaled our grow pods in production over the last number of years, we've invested heavily in automation of key processes. These automated processes have streamlined our labor requirements, translating into significant improvements in production costs per gram. Over 2020, our production costs per gram has trended downward significantly to just 67 cents per gram in Q4 2020, putting us in an industry-leading category in terms of production efficiency. From a scale perspective, the company currently has 297 pods licensed by Health Canada as a part of our Phase 1 and Phase 2 facilities, representing approximately 95,000 square feet of flower and canopy under production. Our current cultivation capacity is approximately 8,325 kilos per year of high-quality dried cannabis material, or approximately $25 million worth of dried cannabis in today's Canadian wholesale market. We're now working to expand our Health Canada license perimeter to include additional buildings on our existing site, which will bring our total licensed square footage to approximately 135,000 square feet. The next phase of the company's Phase 2 expansion will bring our total grow pods under license to approximately 420, with an annual capacity of approximately 12,000 kilos per year, or approximately $40 million worth of cannabis in today's wholesale market. Over the long term, we plan to continue to bring additional supply capacity online as the legal Canadian cannabis market continues to expand. However, I would note that due to the recent uncertainty in global capital markets due to COVID-19, as well as the general uncertainty in the Canadian cannabis wholesale market, we have suspended our plans for our Phase 2 expansion until we have greater certainty in the market. In terms of the company's product offering, we currently offer approximately 30 different SKUs of dried cannabis flower, making up the majority of our overall product offering in 2020. The remainder is comprised of multiple blended cannabis products, 4 different SKUs of cannabis pre-rolls, ingestible cannabis oils, a powdered cannabis concentrate, and several what we call 2.0 cannabis products or derivative cannabis products currently in development. Now, there's been significant interest or excitement in the Canadian space over the rollout of these 2.0 derivative products. However, dried flower continues to demand over 70% market share by category in the Canadian marketplace, with much of the consumer demand in the high-potency segment. In our cannabis flower portfolio, we have a large number of high-potency and high-quality varieties, and with access to an on-site seed bank with over 75 unique cannabis genetics, we have a long pipeline of new products which we can develop and deploy to ensure that Delta 9 remains a leader in high-quality indoor hydroponic cannabis products. In 2020, Delta 9 also developed and launched numerous house-branded products in the mid-range potency or value segment in 3.5 and 7 gram settings to compete with other value platforms introduced by our competitors. With relatively low production costs and improved price stability in the Canadian cannabis wholesale market into 2021, we do believe that we are well positioned with a well-rounded dried cannabis flower portfolio to serve our provincial markets across Canada. Cannabis pre-rolls became an increasingly important category in 2020 as consumers have continued to move to smaller packaging sizes and sought convenience in a pre-rolled setting. Delta 9 launched 4 cannabis pre-roll products in mid-2019, and through the balance of 2019 and 2020, we have produced and sold over 1 million cannabis pre-rolls. We plan to invest further in automation of our pre-rolls manufacturing in 2021, which will increase our capacity to produce and distribute pre-rolled products across all of our markets. From a distribution standpoint, the company's undertaken a strategy to add new distribution markets incrementally as our supply capacity has come online in order to reach our ultimate goal of becoming a national distributor of recreational use cannabis products. Delta 9 is currently licensed for distribution in Manitoba, Saskatchewan, Alberta, British Columbia, Ontario, and Newfoundland and Labrador, giving us reach from coast to coast to upwards of 25 million potential Canadian consumers. As the company increases its production capacity, we plan to continue to increase or expand our distribution into additional provincial markets through supply listings or formal supply agreements in those markets. Now on to vertical integration into the retail cannabis space. Delta 9 opened its first Delta 9 cannabis store on Legalization Day in Canada on October 17, 2018, to lineups around the block. And since that time, our retail store chain has grown to one of the largest in the country in terms of revenue per store and revenue per square foot. We now operate 12 Delta 9 branded cannabis retail stores spread across Manitoba, Saskatchewan, and Alberta markets. And we believe there are a number of benefits to pursuing a vertical integration strategy into retail, including control over the direct-to-consumer sales force from a distribution standpoint, control over the direct-to-consumer branding and marketing initiatives, capturing additional revenues and gross margin from retail sales, receiving direct feedback from consumers regarding product trends, marketing strategies, pricing strategies, etc., and live product and sales analytics, which help improve our overall wholesale business offerings. Delta-9 stores have produced significant economics in the first years of operation, with revenues per square foot of up to $2,700 for our largest store in 2020. Our store has rivaled the world's top retailers in this key retail metric. Our intent is to continue to build a network of dozens of Delta-9 cannabis branded storefronts over the coming years in markets which allow for private retail sales. Over the past 12 months, Delta-9 has made significant progress in expanding its retail footprint. The success we have seen in this vertical integration model has been instrumental in driving sales of Delta-9 products to Canadian consumers and plays a large role in our business model moving forward. In our business-to-business segment, the company derives a portion of our overall revenues from the sales of cannabis genetics, sales of grow pods, and from licensing and consulting activities provided to other licensed and pre-licensed cannabis companies. We believe that this business vertical provides us a number of benefits, including exposure to the more picks and shovels side of the industry, a complementary business vertical which produces diversified and high-margin revenue streams, provides third-party validation of the company's proprietary growing platform. It creates valuable partnerships with other pre-licensed and licensed cannabis companies, and it gives us the opportunity, I think most notably, for international exposure through non-cannabis touching revenue streams. In 2020, we were able to successfully expand this business vertical into the United States market, building out facilities in Michigan and Maine. We continue to build up our U.S.-focused sales force and believe that the U.S. market will give us a significant amount of potential upside as the U.S. begins to explore federal legalization of cannabis. Now, turning to the company's most recent financials, you'll see that the company has demonstrated over the past 12 months that our focus on operational and financial results have begun to pay off. We've developed a track record for success, and the company has produced significant revenue growth in each year since listing its shares publicly. Revenues have grown from less than $1 million in 2017 to $7.6 million in 2018 to over $32 million in 2019, and the company recently released results for 2020 showing revenues of $52 million, an increase of 64% from $32 million the previous year. From a revenue segmentation standpoint, providing the breakdown between those three business units, retail revenues were up to $32.2 million, up 109% year over year. Wholesale revenues were $11.8 million, up 24% year over year. And B2B revenues were $8.6 million, up 38% year over year. Gross profit for 2020 was $17.8 million, up 105% from the previous year. And I think most notably, Delta-9 produced its first full year of positive adjusted EBITDA in 2020 of $3.8 million. This was up from an EBITDA loss of $3.4 million the previous year. The company also produced positive cash flows from operations of $1.5 million in 2020, making Delta-9 one of the few Canadian cannabis companies which has produced positive EBITDA and cash flows. In Q4 2020 alone, the company recorded record revenues of $14.15 million and positive EBITDA of $1.9 million. On the balance sheet, management has ensured the company has maintained a strong working capital position, ending the year with over $8 million in cash and over $23 million in working capital, approximately $75 million in total assets. The company is currently well capitalized to continue to execute on its expansion plan and can act opportunistically where assets become available, which can expedite expansion, provide strategic value, and improve the financial and operating performance of our business. Now, turning to our cap table, you'll see that Delta-9 has a fairly tight capital structure with approximately 100 million shares currently outstanding. At today's market price, this gives us a market capitalization of approximately $57 million. And we would suggest that on a pound-for-pound basis, there is no company in the Canadian cannabis industry with more revenue and profits relative to our current market capitalization than Delta-9. We feel this creates a significant opportunity for investors seeking value in the cannabis space. Now, obviously, a major question that we've been asked over the past year is the impact that COVID-19 is having on our businesses. To date, Delta-9 has not experienced any material disruption in our businesses due to COVID-19 or government-mandated closures. As a cannabis business in Canada, Delta-9's operations have been deemed essential. The company's focus has been on maintaining operations and growth while ensuring that safety protocols are implemented to ensure the health and safety of our staff and customers. As has been reported in the media, we've generally seen an uptick in our retail business as a result of COVID-19. Online sales and click and collect sales have boomed as people have quarantined at home and sought contactless shopping options. Physical retail stores have also been busier than ever with increased foot traffic and increased cart sizes. But I would note again that as a part of an early 2020 investor update, we announced that we would be pausing on our CapEx deployment for our Phase 2 areas until there is modestly more certainty in the Canadian cannabis market and in the context of COVID here in Canada. So why invest in Delta 9? We are an essential business. Delta 9's business has been declared essential through the pandemic, mitigating the risk of financial fallout due to government-mandated shutdowns. We have a track record for success. Delta 9 is focused on execution of our diversified growth strategy and has produced significant revenue growth across our businesses in the wake of legalization here in Canada. We have investment from management. Delta 9's management is highly invested in the company, representing approximately 40% ownership of the common shares of the company. Diversification. Our diversified revenue approach mitigates risk in an uncertain market environment. Profitability. Investors are seeking cannabis investments that have achieved profitability. The company has produced over $3.8 million in adjusted EBITDA in 2020 and has demonstrated that its business model can be profitable and produce positive cash flows from operations. An attractive entry point valuation. Delta 9 trades at a significant relative discount for our financial and operating results versus our peer competitors and presents an attractive arbitrage opportunity for investors looking for a cannabis company with a track record for financial and operating performance. We have a proven business model with opportunity for international expansion. Delta 9's business model can be quickly adapted to operate in jurisdictions around the world as they reform and implement new legislation and regulation of medical and recreational use cannabis. As always, I would encourage investors to conduct their own due diligence before investing. All of Delta 9's investor materials, including our most recent financial statements and management discussion documents, investor presentations, and fact sheets, are available on our website at invest.delta9.ca, and please don't hesitate to reach out to our investor relations folks with any questions you may have. I'll now open things up for a Q&A briefly. So if attendees today have any questions for management, please use the Q&A chat function on the platform, and we will run through as many questions as we can with the time we have left. I'll just give a few moments for questions to come in here. So first question is around U.S. Expansion opportunities, and it's something we're asked very often by investors. We would highlight that as a TSX main board listed company, we are restricted to operations that are technically federally legal. And the U.S. is a unique market in that there are several states that have legalized for both medical or recreational purposes, although cannabis is still technically illegal at a federal level. What this means for us is that we cannot conduct any plant touching activities within the U.S. market currently. But our B2B segment in terms of sales of our infrastructure, sales of grow pods, is one avenue for us to participate in the U.S. market. So as I mentioned, we did build out successfully facilities in Michigan and Maine for third parties. We've had a significant amount of inbound interest from investors, from startup businesses in the U.S. In the wake of the most recent election campaign down there. So I think we're going to continue to see the opportunity for expansion in the U.S. market. I would expect that the U.S. market will behave fairly similarly to Canada in the wake of or lead into federal legalization, and that would be a significant expansion in terms of the amount of facilities licensed, the amount of cultivation capacity across the U.S. So again, represents a significant opportunity for us. Longer term, we would very certainly pursue actual cannabis touching operations. Again, we feel that our business is very transportable into markets around the world. These grow pods can be placed really in any environment around the world and be producing very similar Delta-9 branded cannabis products to what we're producing here in Canada. In this vertically integrated approach and diversified revenue approach, again, has proven quite successful for the company. Question here on, I guess this came in during the presentation, tables and figures are not showing as the presentation available. I don't typically follow the presentation directly, but I would note that, again, our slide presentation and investor fact sheets, as well as our financial statements and MD&As, are available on the company website. Please do check out delta9.ca or invest.delta9.ca for the most up-to-date investor information. Question here on Ontario retail expansion and potential Quebec wholesale. So good question. Ontario is a tricky retail market in that it prevents or restricts for pure vertical integration. It means that any Delta-9 store operating in that market, Delta-9 would only be able to have 20% of the equity ownership or less. So it means that we would need to undertake, I'll call it a quasi-franchise model, which becomes difficult from a revenue recognition in terms of consolidation of revenue and financials on our consolidated financial statements. It is something that we have looked into, although I would say that it is not core. The Ontario and BC markets are likely a down-the-road conversion franchise type opportunity for Delta-9. And more near-term, our focus will be on Manitoba, Saskatchewan, Alberta, or some of the Atlantic provincial markets that are allowing for full vertical integration and ownership of retail. Quebec wholesale, the company is currently looking at a listing in that market, although if you look to our Q4 financials and upcoming Q1 financials, the company is now reaching a point where we are selling virtually every gram that we can produce across just the provincial markets that we are operating in. Manitoba and Alberta continue to be our number 1 and 2 markets, with Alberta actually overtaking Manitoba in Q4 last year and into Q1 this year. So these markets that we already operate in, we are really starting to find our step. I think from here the question now becomes, how do we increase capacity? We're starting to get active in the wholesale market, purchasing product and reselling that under the Delta-9 brand through these provincial markets. So definite opportunity for expansion into the Quebec market. It is somewhere we want to be long term, but of course we don't want to pursue a listing in that province if we're not able to adequately supply the market. Question here on would we consider large greenhouse or would we continue to feel that the grow pods would provide future expansion and the scale that we need? Yeah, good question. I think we often got questioned on the grow pod model is would that be sufficient for the company's growth, and would it ultimately be efficient or as efficient as these large greenhouses can be? I think, and as I've noted, we've really seen the success in scaling the operations, investing in automation of everything from watering and fertigation systems, trimming, bucking, manicuring of the product, drying, now bottling, labeling, tax stamping, all of these functions virtually fully automated within the facility to a point where you're now seeing, again, about 67 cents a gram for Q4 last year in terms of production. I think we've proven that the grow pod model is very certainly efficient. And really that modular type of growth, I think, is something that's scalable, it's sustainable, and continues to look to be the path forward for us. But again, a number of strategic considerations for the company on how do we increase production capacity now that we are seeing significant sell-through of Delta-9 products. And again, very good problem to have, I would say, in the Canadian market versus our versus some of our other Canadian counterparties who are struggling with inventory write-downs and large inventory levels. And it looks like we just have one more moment here, folks, for any final questions. I think that is now all the time that we have for today, folks. So I will hand things back over to the operator, but I do want to thank everyone for joining us for today and for the questions. If you do have any follow-on questions, again, please don't hesitate to contact our investor relations folks. Thank you very much.
Thank you. This does conclude today's webcast. Thank you for your participation and have a wonderful day.